Okay, so we're going to cover the Dow Jones. So this is the top US 30 companies, blue chip companies. The first key point is, what is price action doing? So that's all we're trying to do at the moment, is establish on the daily time frame what has taken place. Is there more bullish or bearish sentiment? And so what we're seeing at the moment is price action. So we've had consolidation taking place. So consolidation taking place. Price action converging from the highs of around 672 down to the low where we saw that significant decline in February, down to 23,000, or just holding just above the 23,000. Thereafter, a lot of hit and miss in a way. So we're seeing some recovery taking place, but then the downfall coming through trade tariffs, NAFTA, the NAFTA negotiations taking place between US, Canada, and Mexico, and in addition to that, we have North Korea. All of these implications have impacted the Dow Jones, but the only positive note that we have is the recent Donald Trump's tax reform that's taken place is positive for some of the largest companies in the US. So, for example, Apple, which is listed in the Dow Jones, they would be able to bring back billions of cash that they hold offshore back into the US uh, to possibly do some share buybacks or invest in their infrastructure or expansion. Yep. So there's a lot of positivity in regards to individual companies benefiting with a new tax reform, but trade tariffs still is looming over this industry. Yep. So going down to the 4-hour time frame, again, it's not something significant for me to say, okay, yep, this is where I'd potentially look to buy at this stage. I would like to trade a trendy market. So yes, I mean the previous high is just above the 25,000 handle. So I'll be looking for a break above the 25,000 handle, and that will be my sign of a potential long position. But for now, there's a lot of hesitation. You have to keep up with geopolitical concerns um, to better understand that, okay, when is a good technical break going to take place, and if you are looking to go long or short. So that's more on a sort of longer term macro. Okay. Okay, so now we're looking at gold. We're looking at gold. So looking at from the 2017 low, so early 2017, end of 2016 low. From there on, we have this trend line in place. The trend line has its price action is at its third touch currently. So price action is at its third touch currently. It's got two touches in this region. There's a lot of gap in between price action over here, which I don't like, but it is an uptrend overall. So on the top side, always look at the price action from the top side as well. And what we're seeing is, if I look for sort of resistance level, it will be this handle here, which is 1355. So 1355 has been respected multiple times, not just recently, but also previously, when I just zoom out from these highs as well. Yep. Thereafter, we've seen more of a calming effect taking place on gold. So gold has retraced back to this trend line, and there's some hesitation taking place at this point over here. So not such a great chart in regards to sort of taking a potential setup. What you could now potentially look to do, maybe go down to the 4-hour time frame and see if you could apply a downtrend line. Sort of the short-term view is a downtrend, so taking it from the high up there, trying to apply it to include most price action. So it's something similar to this. So from this high, so that original sort of false break to the top side, and then we had that sell-off back within the resistance. So that's the first low. Retracement back up to this previous high, so retesting this level again, retest this resistance line, and then we go on to break through the previous lows and test the 1305 handle. So some hesitation in this region here, a slight pull back up to sort of 1325, and then we've had the next leg down, which is back to 1286. very difficult to break through this handle over here. So you can see a lot of hesitation with price action converging and staying with this within this region. A slight break to the upside, led with fundamentals taking place over the last week or so, and that's now moving sideways. So I think price action is actually waiting. So the market is actually still waiting for a clear guidance in regards to which way we're going. So a key point over here is we're still on hold. Okay, trade tariffs has been looming for a while, and only last week it's been made certain that there will be trade tariff implications to the euro, to Canada, and to Mexico, and that's a show of power for Donald Trump, and he's also trying to show that he can impact global markets by holding these trade tariffs to these nations. And he wants to also show China that he is looking to go ahead with his plans, and it's not just empty threats. So yes, that is a pivotal point there, but also that has been slowly being priced into price. Yep, so that's been priced in and discounted very quickly. The other key area why price action hasn't broke lower but's holding this level is the fact that US and North Korea were meant to meet at a summit which is taking place in a week or so, and it's based in Singapore, I believe. So this is now taking place. So there was talks in regards to a formal letter being publicized by the Trump administration, stating that okay, when there is no meeting going to take place, no summit, and now there is. Over the weekend, it's been declared that there will be a summit. So markets are on edge, but no decision has been made. So it's more of a wait and see and react to what takes place. Yep. So I'll be cautious in regards to where price action is at the moment. It's not a very good trade setup. Maybe on the shorter term, so if you're looking at the 1 hour time frame or potentially less, you could trade within the range. You could trade in through the breaks of these levels or the rejection of these levels. Yep. Okay, so now we're going to go into cable. So we're looking at the daily time frame. I like to take that bigger picture view. So that bigger picture view allows me to incorporate a large amount of technical analysis, incorporate a lot more price action, and also start to understand what the fundamentals are showing me. So starting from this low, this is your Brexit. This is your Brexit that took place pre-Brexit, now in post. So post, a strong sell-off, a large amount of sell-off taking place, reaching these lows in this region here. Since then, it's been trending nicely. It's been trending to the upside. Yeah, but you can see the momentum gaining in this region here. So since November, November up till I would say February, we saw a large rally to the upside, almost testing the 144 handle. So almost testing the 144 handle, and thereafter we had some hesitation taking place, a retest of that previous high. So almost in a larger formation of a double top taking place there. And this sell-off is largely led to what was once originally thought a highly likely rate rise was a very unlikely rate rise taking place. Yep, and that got priced in before before the decision was even made. So we started to, if I now zoom in to sort of the 4 hour time frame. So from these highs over here, we've seen a significant amount of selling off taking place, and that was largely due to a number of sort of the first quarter. So the first quarter data of this year coming out negative, worse numbers than expected, along with poor weather conditions, poor retail footfall, or as well as poor consumer confidence. So in addition to that, we had the head of Bank of England, Mark Carney, speaking and stating that a rate rise may not be on the cards, and that what was largely thought that 88% probability of a rate rise going down to 55%, and then even further comments later on, dropping that down to 26%. And a rate rise did not take place, and the rate rise actually took place in this region here. The rate rise actually took place, sorry, not rate rise, but the rate decision did take place in this region here. And you can see that all the way through. So if we look at all the way through, was on the way down here was negative data as well as a dovish Bank of England all the way through, and that got priced in when the actual decision came through in regards to there was an unchanged rate decision. But in addition to that, the BOE actually stepped up its rhetoric by saying that this could be just a temporary blip and that we are likely to raise rates. That did not have a significant impact on the markets because it was already extremely bearish, extremely pessimistic. So it actually just went sideways. It went sideways and then continued to the downside, We're now finally starting to see some positive data coming through. So consumer confidence has come out positive. That came out positive last week. We've had now construction PMI data showing some positive numbers. And if we start to see data and rhetoric from the Bank of England coming out positive, then we may start to see that this was potentially the bottom and a larger rally may take place. Yeah, but then do be concerned about not just sterling news, but also dollar news. We're looking at a pair here, so you need to understand not just what's taking place in the UK, but also what's taking place in the US. So the US are expected to raise rates in the coming weeks. So they are expected to raise rates, but raising rates is not too much of a concern. What that's already expected by the market. What is a concern is whether they raise rates 3 times this year or 4 times this year. Now they've already stated towards the beginning of this year that they are more than happy to raise rates 4 times this year. And that's what started to be priced in. But if they take that off the table now, if they take that off the table, then we may see a weaker dollar. We may see a further weaker dollar, even if they raise rates. But rhetoric, a dovish rhetoric, could lead the markets to the downside for dollar, and we may see even a larger rally for sterling. So some more sterling strength there. Yep. So that's the area that I would be concerned about in the coming weeks.